Hey everyone, welcome back to Corporate Decoder, the place where we uncover the secrets hidden in business filings. And today we're diving into Putnam International Equity Fund's latest shareholder report, a document that's usually as exciting as watching paint dry, but sometimes it holds some real gems, and let me tell you, this one might just have a few. Before we jump in, if you love getting uncomplicated insights from complex financial reports, make sure you hit subscribe and join our community. We've got a fantastic Discord channel linked in the description too, so you can chat with other finance fans. So what's the big story from Putnam International Equity Fund for the year ending June 30, 2025? Well, it looks like the fund had a pretty solid year with the Class A shares returning a handsome 22.10%. They're comparing their performance to the MSCI AFF Index, which did pretty well too at 17.73%. That means Putnam's fund actually beat its benchmark. Investors would have seen companies like Raihin Kaikoku, a Japanese retailer, really helping out the performance. On the flip side, Samsung Electronics and a couple of other stock positions that were sold off dragged the returns down a bit. It's a mixed bag, but ultimately a positive one for shareholders. Let's talk about how the fund itself has been structured and if there have been any major shakeups. It seems like there was a big organizational change, with Franklin Templeton becoming a key player. This whole section talks about how Franklin Templeton is now involved as a sub-advisor. They basically brought in Franklin advisors to help manage the fund's money. Then, a bit later, on November 1st, Putnam Investments Limited merged with Franklin Templeton Investment Management Limited, so the people who were managing the money through Putnam are now working for Franklin Templeton. It's like a big corporate shuffle to streamline things, and it looks like the team in charge of picking the stocks has changed too, with Vivek Gundy and David Morgan taking the lead. These kinds of changes can sometimes signal a shift in strategy, so it's always something to keep an eye on. Now let's dig into the actual numbers. This table shows the average annual total returns for the fund's different classes of shares. For Class A shares, the one-year return was 22 CNACI ETH index, which returned 17-year was 6.19%. These are important because they show how the investment has performed over different time frames. The Class A shares with sales charge still saw a decent return of 15.08% over 1 year. Comparing this to the MSCI BAF investment has performed over different timeframes. The Class A shares did outperform. For Class C shares, the one-year return was 21,000%. Again, this is better than the MSCI FE index's 17.73%. Over 5 years, Class C shares returned 10.83% and over 10 years, 5.56%. While these returns are good, it's worth noting that Class C shares often have higher fees, so it's always important to understand those costs. Class R shares showed a 1-year return of 21.75%, a 5-year of 11.37%, and a 10-year of 5.92%. These are also looking pretty strong. Class R5 shares brought in a 22.46% return for the year, 12.03% over 5 years, and 6.54% over 10 years. These seem to be performing very well across the board. And finally, Class R6 shares with a 22.56% 1-year return, 12% over 5 years, and 6.64% over 10 years are also showing solid performance. It's interesting to see how these different share classes perform and how their returns vary slightly. Looking at the key fund statistics as of June 30th, 2025, the total net assets of the fund were a substantial $804 million. That's a lot of money being managed. The portfolio turnover rate at 77% tells us how often the fund is buying and selling stocks within the portfolio. A higher turnover rate can mean more trading activity, which might lead to high transaction costs, but it can also indicate a more active management approach. Now, let's peek at what the fund actually invested in. As of June 2025, a whopping 97.1% of the fund's investments were in common stocks. This means the fund is heavily focused on owning pieces of companies. The biggest concentration by country was Japan at 20 there. Mitsubishi UFJ Financial Group and Sony Group are significant holdings. It's interesting that Japan is the top country given the international focus. The United Kingdom also represents a significant portion of the holdings at 13 Group PLC and Tesco PLC making up part of that. And the United States comes in at 14.6%. It's a diverse portfolio with investments spread across many countries. This part here showing the net realized gain or loss from forward exchange contracts is quite interesting. They had a net change in unrealized appreciation of $2.7 million, but a realized loss of about $2-3 million on these contracts. These are essentially bets on currency movements, and it shows how managing currency risk can impact the fund's performance, sometimes positively and sometimes negatively. Overall, it looks like Putnam International Equity Fund had a strong year in terms of performance, especially when comparing it to its benchmark index. The fund is broadly invested across different countries with a significant weighting towards Japan and the United Kingdom within its common stock holdings. The corporate changes with Franklin Templeton's increased involvement and new portfolio managers suggest a potential evolution in how the fund is managed. Now for my take on this, the fund's performance seems robust, especially considering the market conditions they mentioned. The fact that they're outperforming their benchmark is a good sign. However, the 77% portfolio turnover rate is something to monitor. While it can mean active management if it's too high, it can eat into returns through transaction costs. Also, the way they discuss the management fee adjustments, which are tied to performance against the MSCI VF index, is a smart way to align the manager's incentives with shareholders. The shift towards Franklin Templeton in management suggests a move towards potentially broader resources and expertise. The key takeaway for investors is that while the fund performed well, the underlying strategy and any changes in management can always impact future results. It's a solid report with good returns, but always keep an eye on those evolving management structures and operational costs. Alright, that's our deep dive into the Putnam International Equity Fund's shareholder report. What do you think about these performance numbers and the corporate changes? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe for more no-nonsense corporate analysis. And seriously, check out our Discord community linked in the description. Thanks for watching and we'll see you in the next video.